Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. On the daily time frame, we're still seeing a weak upward correction, which could end at any moment. A liquidity pool remains untouched below. With a high probability, price will move toward it, while the 57.5K target USD remains unfulfilled. On the 4-hour chart, price continues to trade inside a sideways range. The downtrend is not over. The market is simply in a pause. Meanwhile, analysts at the Wall Street Journal suggest that Bitcoin may have already completed its correction and could start a new uptrend. However, it is worth noting that similar calls have been made repeatedly over the past few months. This week, reports emerged that Tehran and Washington agreed on a 2-week ceasefire, which supported risk assets and pressured the dollar, as it has been relying mainly on geopolitical tensions over the past 2 months. And indeed, that is why we saw Bitcoin gained around 4,000 USD on this week, while the dollar lost roughly 100 and 150 pips against major currencies. However, on the 4-hour time frame, nothing has really changed. The market is still in a range. After a deviation below the lower boundary, price moved to the upper boundary and printed 3 more deviations, sweeping liquidity above recent highs. This suggests that Bitcoin could soon rotate back toward the lower boundary of the range. On the daily time frame, Bitcoin continues to form a downward trend. The trend structure is identified as bearish, and the CHOCH line currently at the level of 97,900 USD. Only above this level can it be considered that the downward trend has ended. The current target for the downward trend remains nearly at 57,500 USD, corresponding to the 61% Fibonacci retracement level. Given no signs of a trend reversal to the upside, we believe the decline will continue. On the daily time frame, the nearest area of interest, point of interest, for new sell trades is the range of 79,500 and 81,100 USD. Additionally, about a week ago, another bearish FVG formed, with a preliminary withdrawal of selling liquidity, and the price even reacted to it. However, on the 4-hour time frame, the probability of a sideways trend remains high throughout this period. On the 4-hour time frame, the price has dropped to the lower boundary of the sideways channel, formed a deviation, bounced from it, and may now rise again. The CHOCH line, which provides support for the upward correction, is at 65,500 USD. Breaking this line will mark the end of a month-and-a-half long correction. During the latest phase of the decline, two new bearish FVGs were formed. But if the flat continues, the internal patterns hold no significance. On the daily timeframe, Ethereum continues to form a downtrend. There are 3 bearish patterns, all of them FVGs, which can be used as a potential areas for future short entries. However, despite a month and a half of correction, Ethereum has not even reached the nearest one. The closest FSG is located in the 2,480 USD, 2,630 zone, and this is the key area of interest for traders. The CHOCH level stands at 33.95, marking the last lower high. As long as the price remains below this level, the downtrend remains intact. On the 4-hour timeframe, price broke out of the range and briefly formed what was looking an upward trend, but it faded very quickly. In a strong downtrend, any upside move should be treated as a correction by default. The past month and a half has clearly shown how difficult it is to trade these corrective moves. Below the trend line, as we see on the green line, lie the key targets for market makers, which is why we remain confident that the broader downtrend will continue. On the 4-hour chart, the only relevant POAs are the last 3 bearish FVGs. With the most recent one being fulfilled yesterday, the reaction from this area could trigger another leg lower. That's all for today. See you online soon and good luck.